Welcome to Alpha Recap, your aftermarket wrap-up from stockalpha.ai. Markets closed mixed today, and we had a day full of concentrated, event-driven moves rather than a broad theme. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. What really stands out is how a handful of headlines, M&A chatter, trial updates, and AI positioning basically ran the show. Big swings in single names today.
Totally. Let's dig in. First up, the AI and hardware narrative. SanDisk was flagged as an AI-driven storage outperformer, and Nvidia's forward valuation got a lot of attention.
Right, and the number that really caught our eye? Investors noted Nvidia trading at about 22 times forward earnings, which is a big step down from its roughly 37 times 5-year average.
Hold on, say that again? So, Nvidia, which has historically been priced like a hyper-growth company, was reassessed closer to the broader market. That's a massive narrative shift.
Exactly. Some folks are calling it growth that looks like value. The other camp says compressed multiples could mean higher execution or macro risk, or simply normalization after years of extreme premiums.
So for listeners who want the simple breakdown, when we say the forward price-to-earnings ratio compressed, it can happen because prices fell, earnings expectations rose, or both. In plain terms, either the market is saying earnings will improve, or the stock lost some of its premium.
Yeah, absolutely. And for AI-exposed hardware names like SanDisk, the story is more about demand nuance. AI workloads need different storage, faster reads and writes, tiered architectures. So if SanDisk actually picks up market share, that matters.
But there's also pushback. Some investors are skeptical because the SanDisk mention came without company-level financials. So it's an industry signal, not a confirmed company re-rating yet. Right. And the other thing is...
Yeah, that tracks. You don't want to buy solely on a headline without earnings or guidance to back it up.
Moving on. Event-driven catalysts were huge today. Electronic Arts had takeover chatter with a reported valuation of about $55 billion. Jazz Pharmaceuticals jumped nearly 30% after an operational beat and reported cancer trial progress. And General Motors rallied on record truck sales, plus stepped-up shareholder returns.
That Jazz move was wild. Nearly 30% intraday on clinical progress and a good quarter. Classic biotech binary risk and reward. Not what anyone loves to see unless you have tight risk controls.
Totally. Those moves show why traders and event-ready managers live for these days. But for most investors, the prudent take is to treat M&A and trial headlines as probabilities, not certainties.
Exactly. With the EA rumor, a reported $55 billion takeover is a big premium if true. But buyer identity, financing, and regulatory hurdles can change everything. Model scenarios. Don't assume it closes.
Short reactions.
Wait, really?
Hold on, say that again?
Noted.
Let's talk paperwork, because alongside the rumors, we saw a flurry of 8K filings. Roman DBDR Acquisition Corp. 2, CubeSmart, Amneal, and Carter's all filed 8Ks today. And some included Regulation FD notices.
Good point. For listeners, an 8K is the form companies use to report material events quickly. Think deals, operational updates, or important exhibits. Regulation FD being cited is a tip-off that management is trying to manage selective disclosure. So paperwork can either confirm headlines or put a damper on them.
So, what really stands out here is that filings matter. A rumor might move a stock, but the 8K is often where the story is nailed down or unraveled.
Right. And for SPAC investors, like those following Roman DBDR, a material definitive agreement in an 8K can change timelines and economics in a hurry. Read the exhibits. Know the cash-in trust math and sponsor terms.
Let's dig into disagreements we heard across the market. First, valuation versus momentum on Nvidia. One camp thinks 22 times forward earnings is an attractive entry into AI, growth at a value-ish multiple. The other camp worries it reflects risk or normalization.
Yep. If you're a long-term holder betting on multi-year AI capex, you might be patient for multiple re-expansion. If you're trading near-term momentum, you need earnings beats and consistent data center demand to justify further upside.
SanDisk's status as an AI storage outperformer was also contested. Some people treat the signal as meaningful, others say it's weak without revenue proof. I mean, when you step back and look at this, signals without numbers are risky.
Which connects to Jazz and EA. Both are headline-driven. Optimists see upside. But history shows rumor-driven reversals are common when confirmations don't follow. So model probabilities, size positions accordingly, and consider hedges.
Practical actions for different investor types. Growth investors. Consider staggered entries into AI names and be prepared for patience if you expect multiple re-expansion.
Value and income investors. GM's mix of record truck sales plus more shareholder returns is worth attention. Cyclical recovery plus capital return can fit a total return playbook.
Event traders and activists. Jazz and EA are classic event trades. High volatility, big catalysts. Use options or defined risk strategies if you want asymmetric exposure.
REIT and conservative investors. CubeSmart's 8K is the kind of routine filing you still want to read. Small shifts in rent trends or occupancy can change yield assumptions. Confirm the exhibits.
And SPAC investors, again, read Roman DBDR's 8K. Material agreements can change the game quickly.
Quick aside. Hilltop Holdings was another name mentioned in morning notes, trading around $38.82 and up about 10% over 6 months versus the S&P up about 7%. Small examples of relative outperformance without headline drama.
Let's cover the tactical checklist. 1. Verify filings before changing position sizes. 2. Treat M&A and clinical headlines probabilistically. 3. Stagger entries into AI-exposed names. 4. Consider options to hedge event risk. 5. Watch capital allocation signals across cyclicals.
And a couple of practical portfolio notes. If you buy into these headlines, size for binary outcomes. That means smaller initial stakes or hedged positions. Protect your downside.
Short reaction.
Smart move.
Before we wrap, a few takeaways. 1. The day was dominated by concentrated, event-driven moves, more than a single macro theme. 2. AI exposure is getting repriced for some large names. Nvidia's shift in forward multiple is a big conversation. 3. Rumors move markets, but 8Ks and Regulation FD notices are where conviction comes from. 4. Treat M&A and trial news probabilistically and size positions accordingly.
Honestly, I was a bit surprised by the intensity of single stock moves, but it reinforces a lesson. In the age of fast headlines, disciplined risk management and reading the filings will separate the winners from the headline chasers.
All right, that's our wrap for today. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close to unpack the next set of headlines. Bye for now.